Welcome back to the Accounting Labs. Today we are diving into Chapter 2 of the ACCA Financial Reporting syllabus, the regulatory framework. In this session, we're going to look at the massive global infrastructure that ensures financial statements mean the same thing, whether you are reading them in London, New York, or Singapore. Let's get started. First, let's look at Part 1, why we regulate. Before we study individual rules, we have to grasp why global capital markets demand standardization, who these standard-setting bodies are, and how their structural governance works. So why do we need regulation? First, it provides investor protection. Without strict standards, companies have massive incentives to engage in creative accounting to inflate performance. Regulation ensures objectivity, transparency, and high quality, so investors can trust what is reported. Second, it drives global comparability. International investors cannot easily evaluate firms if they are comparing financial statements built on totally different local rules. Having a unified regulatory framework breaks down these barriers entirely. Let's look at the actual global architecture behind these standards. The international regulatory model operates on a clean three-tier framework. At the top sits the IFRS Foundation. Comprising 22 trustees, this group oversees funding, strategic governance, and appoints committee members. Directly below them is the International Accounting Standards Board, or the IASB, which is the independent expert body solely responsible for writing and publishing IFRS accounting standards. Finally, the system is supported by the IFRS Interpretations Committee, or IFRIC, and the Advisory Council, which help clarify complex standard applications and guide strategic priorities. A key target for your ACCA exam is the IASB's due process, the transparent public workflow used to create a new standard. It starts with agenda selection based on public needs. Next, the IASB may issue a discussion paper to gather initial global feedback. The most vital milestone you must remember for the exam is the exposure draft. This draft version is published and made open for public comment, typically for 120 days. Once those comments are reviewed and a consensus is reached, the IASB casts a vote to publish the final IFRS standard. This brings us to Part 2, regulatory philosophy. Now that we understand the governing bodies, we need to look at how standards are conceptually written and compare the two main standard-setting paradigms used globally. There are two major philosophies here, a principles-based system and a rules-based system. IFRS uses a principles-based approach. This means the standards focus on the underlying economic substance of a transaction rather than its legal form. While this requires more professional judgment, it is highly resilient against creative financial engineering. In contrast, rules-based systems, like US GAAP, rely on explicit limits and bright-line rules. While rules ensure consistency, they often invite clever accountants to structure transactions specifically to bypass the letters of the law while violating its spirit. Let's talk about the massive real-world impact of IFRS. By establishing a single set of high-quality standards, we achieve global capital convergence. This convergence makes cross-border corporate listings far simpler and significantly lowers the administrative costs of translating financial reports. Ultimately, it opens international funding doors for companies, allowing capital to flow freely to its most efficient uses. However, we must remember that local environments still heavily influence accounting. First, local legislation always plays a role. National regulators must formally adopt or endorse IFRS for it to hold legal weight in their country. Second, in many nations, standard accounting reports are closely linked to local taxation frameworks, creating unique local pressures. And third, national standards regulators continue to work in convergence with the IASB, striving to bridge any remaining gaps between local GAAP and IFRS. And that wraps up Chapter 2 on the regulatory framework. If you have any questions on principles versus rules or the IASB's due process, drop them in the comments section below. Don't forget to hit subscribe and give us a thumbs up so you don't miss Chapter 3, where we will dive deep into the conceptual framework. Thanks for watching, and see you next time at the Accounting Labs.